Hello, g'day. Welcome. That was a far too epic. Oh, there we go. That was a far too epic intro, I think, for us. But here we are. Welcome. My name's Don from the Off-Chain podcast, and real pleasure to be able to host today's panel, or this morning's panel. We've got James Scott from Faculty Group here at Venture Studio, and I'm just going to recline for a little. Faculty Group, man, Venture Studio, incubating, accelerating, famous for seeing the Lunar crash and the FTX crash in advance. So I don't know what kind of crystal ball you guys have got, but we'll hope to hear some more from that today. Max Hunt from Otaris, also a Web3 accelerator, and we've got Mark from NotCentralised Venture Studio. You basically run half of blockchain in Australia, so great to have all three of you on the panel today. We should start with, use the word venture studio a couple of times. What even is a venture studio? What does that even mean? Venture capital, people would be mostly aware of. And I'm assuming if you're here in this session, you're either keen to deploy capital and wondering like where are other people looking for the next bull run, or you're a builder, you're a developer or builder, startup founder, wondering, man, am I just going to waste my time building in the bear? Where should I be looking going forward? What does a venture studio even do?
Oh, myself? I thought we were talking before and James had the best explanation, so I won't steal that from him, but I just think that venture studios are places where you're a bit more active with your investing because you've got people that are actually helping doing the build. So when we invest in our own projects and others, we're actually participating in the creation, whether it's we're acting as CTOs because we've come from development space, or we're helping steer the direction of what it is that is being created.
Yeah, I'd say in 3 words, money with support. So you have passive money, so VC might just provide you some investment capital, and that's it. They just want to see a return. There's strategic investors or VCs that provide some services with that. They get in the weeds, they help, and then a venture studio typically has services wrapped around the investment. They might have marketing or market making or other services they provide. So they're very much more hands-on.
All right, so pretty brutal bear market. Signs of life recently, which is really nice. How have you, I mean, lots of VCs have, wound down or lost all of their money or ran out of steam over the last couple of years. Some are doing particularly well. One of the kind of trends that we've seen is last year where VCs were, or even the year before, spray and pray. Any deck that came past their desk would, get a look in. And I know of some venture capital firms and venture studios that last year even were still into the triple figures of capital deployment. This year, single digits. And so how are venture studios weathering the long bear?
Well, I could say in general, a lot of the VCs, they either stopped investing over the bear market or they went to liquid assets. So they weren't investing in projects. They were just dealing on the open market where they're going short or long on assets. But with the venture studios, you can really mitigate the risk by being hands-on. So you really know what the project's doing. You can see their cash burn. You can help with treasury management and ensure they can survive the bear.
I definitely saw that there were people in the VC space that the bar was a lot higher. So you had to see a lot more traction. They wanted to see more results. And, it's not just based on a good pitch deck or a good chat at a convention. It was, let's see the customers, let's see the app, let's see people actually using it, let's see the MOUs, basically the potential sign-ups with clients and agreements with corporates. So a lot more of that kind of stuff, but we still did see things getting invested in. It was just a lot more serious. Like you had to have that higher bar, which made sense given where we're at. But in the bear market, this is the best time because if you're investing or you're building or you're being in the space right now, you've got much more upside potential rather than you're getting in when everyone is talking about a particular topic. So, that's an area of interest for us.
Yeah, definitely. And I was also going to say, with projects, basically the networking side of things through the bear market was the most important. So projects that we saw coming through, across the desk, you wanted to see that they had the ability to sort of network from person to person to get a friendly introduction. And so that I guess networking, then goes into sales, and then also goes into hiring. So, that sort of proof, that MVP, I guess, in a way, shows that a project has the ability to do what it takes to become profitable. And so that was another key feature of during the bear market, we wanted to see that.
So while VCs, they're not doing so much white paper investing anymore, but for venture studios, we're actually not just deploying capital, but building as well. And again, thinking for people here who are looking for the place to build, or they're wondering, is my vertical or is my project going to make it? But also for people who are looking at investing. You are still looking at white papers, or how can we, from an idea, actually build that out and launch that? So what kinds of projects, ideas, companies are you looking to build now in the bear market while capital is, there's capital around, but it's not being thrown around. What are you building? Which market segments, what kinds of projects are you looking at building right now?
I thought we should start with the guy that's wearing the shirt covering the thing that he's building.
Jeez. Well, there's things that are going to separate, I think. There's going to be innovative, decentralized products, and then there's going to be very much centralized and licensed products. So you're going to have two extremes because of laws and regulations, essentially. So on one side, the innovative, like DeFi products, infrastructure, middleware, tooling, all of that kind of stuff is a bit of a safe play, particularly when there's a solid team around it, because the team's everything. But then the fully regulated, licensed products as well, which are fully compliant. They do KYC on everybody. They do KYT on all the transactions, and everything's above board. There's these two differences, which particularly I like looking at, and stuff that makes crypto work. There's, you look at crypto remittance, it only works with traditional gateways involved because people want to cash out on the other end and they need fiat. So there's these critical payment infrastructures that actually make crypto work, and that's very much a Web 2 thing and essentially a crossover into Web 3.
I'm seeing some stuff as well in that space. Some people might think of it as a little bit boring, but it's the boring stuff that makes the world work. Like, you don't care about how the internet works or how, apps on your phone, what's the choice of programming language that they've got. But in the crypto space, we get bogged down by the fact that, what language is it in? Which blockchain is it on? There's no one greatest blockchain out there, even though I love Ethereum, but it's all about context, and in different situations, just the very premise of blockchain technology and what it provides in being a transparent, immutable, secure source of information, that despite FTX and all these other things that are related to blockchain, it wasn't because of blockchain that things fell over. So the things that we're seeing are, it's boring stuff. It's stuff that is paper-based at the moment, or a very manual process like escrows that are expensive and manual. Digitizing that, it lowers the barriers of entry. We'll see a lot less construction companies, which are falling over every 2 weeks in Australia, have those issues if they just had digital escrows, and the same thing overseas. And we're also seeing a lot of cool things in the AI space, where in AI, they actually need blockchain technology to secure the data, or even zero-knowledge proofs to be able to prove certain features about the data. They try to do things like watermark data to prove, who owns it or that it was generated by AI. ZK proofs are a much better version of that kind of thing. So we're going to see a lot of crossover there, I think.
Anything else?
No.
I should also mention, if you'd like to ask a question, we do have about 5 minutes for Q&A as well. So if you jump into the app, you can ask a question in the page for this particular session. If you'd like to ask a question, you don't have to wait to the end. You can put that in now. So you're saying boring stuff.
Well, I can add a little bit to that. With a venture studio, you're really looking at what's going to work in the long run. A lot of people just follow the hype and where the biggest grants are. But is that really the right solution in the terms of a protocol? Is that really the right solution for the project you're doing? Or is this grant so attractive, you're just going to build there? We see a lot of people jumping from protocol to protocol based on the hype or the grants that are being offered. It's not necessarily the right solution. So I guess the point is venture studios come in and really determine what's going to work for the long run.
I would say not only boring projects are getting built. That's obviously where there's, I guess there's a lot of potential and beyond the bear market. So building a project that is boring and is, sort of digitizing like an already sort of a manual process is very good for building through a bull market that we are coming into and then surviving beyond that. But with at Otaris, we see a lot of smaller projects because we do a lot of sort of light incubation and I guess through to acceleration as well. And with that, we see sort of, like these smaller projects that move faster, do more exciting things, a lot of real world assets, sort of a lot of things around tokenizing land. We see a lot of projects that are doing a lot of things around, I guess like security for the consumer. So people that are entering blockchain, sort of getting, utilizing AI to understand what's happening on chain so they don't get caught out. And these projects are, they're small, they're nimble, they're exciting. But what we want to see is we want to see a project that has the potential or already has some cash flow, and they don't just rely on the grants. The grants are a great thing. The investment is great, but you're building a business, and I think a lot of projects, especially 2017 and even the 2020s, they sort of relied on, they build a project to get VC money when it shouldn't. I mean, we want to see projects that build a project as a business model the same way you would build in a traditional market. And so we want to see projects that are actually going to be profitable, have users, and so that sort of is what we're seeing now, especially. And I think these projects that have built through this market, the bear market, they've been building hard. They're going to really reap a lot of rewards coming through to 24, 25. And then hopefully some of them stick around and they're cash flow positive. They're actually real businesses. And so I think that's going to be a real difference in this market compared to the last couple of cycles.
Okay, so some of that's just general good business.
Yeah, of course.
Foundational stuff. Okay, so if we're looking forward, so you mentioned 24, 25, if we start to kind of crystal ball for a second, what are the industries, what are the technologies, what are the verticals you're most excited about? You've mentioned some things that are boring, some things that are sexy. If we could talk about it more in terms of like what is gaining the most eyes? What's getting your attention and what's getting your money at the moment?
Apart from traditional boring, and I'm more fun off stage, boring banking kind of things that are just so cumbersome. We're seeing a lot more excitement coming back into the gaming space. Immutable keeps coming out every couple of weeks and maybe sometimes months, but with some really great announcements. I forget the studio, the real world gaming studio. When I say real world, I mean traditional kind of gaming studio that they're working with. So really excited to see the kind of stuff that's coming out of that. And then as well, it's all of the interconnected kind of projects. James and I were just in the Philippines, and they've got some amazing projects there where you're going from NFT tying into some ESG type sustainability play with the tokens that are bought from the NFTs, and that's tying into being able to use that money to create goods and services from farming the land in a better and more sustainable way, whether it's creating bags that appear on runway fashion shows overseas, but that end-to-end kind of interconnected where you see the whole supply chain of the blockchain, that's areas that I'm seeing really interesting.
I think the right use of blockchain, there's so many projects or use cases for blockchain in general, but not a token. This is one thing. People try to implement a token, and often it's for a fundraise. So projects that are just doing things for the right reasons, it's innovative. I do like the payment side of things because there's a definitive Web 2 to Web 3 crossover that powers industry. But there's a whole nother discussion of if token or when token. And a lot of the plays now are like a traditional equity investment, and there'll be like a token warrant or side letter or something like that. So if there's a token down the line, like we think it's a good use case and we may do it, and if we do it, that equity investor gets to option that or gets some of the tokens based on their equity investment.
Yeah.
So for people thinking about building now, rewind 6 years ago and ICO craze was all about, if you talked about equity, people would go, what is that? What does that mean? Yeah. We have a token, that's what we're selling. You buy the token, you own part of it. They didn't even understand how it worked. But now you're saying, are we avoiding tokens? Are we utilizing them only if they make sense? Are you worried about the regulatory landscape? Why do you say no token?
Well, there's definitely, we're in this regulatory transition period, particularly with US regulations and The Howey test is archaic, and there's quite easy to trigger some of the points in the Howey test, like doing a token sale could be called a security based on the use of the token. I'm not going to get into some of those aspects, but the token just needs to make sense and have a definitive use case. But a sustainable flywheel, this is the thing, like a lot of people do carbon copies of like, well, doing a similar project to this, so we'll just copy their token economics. But often it fails, and you mentioned Luna and algorithmic stablecoins only work in a bull market because of the network effect. Everything's case by case. There's no coverall for or a template for each project, essentially.
Yeah.
I guess it's a good business model. If it's a good business model, and the tokens and even blockchain itself, it isn't always necessarily going to be only about the blockchain. It's going to be, here is a problem, here is technology that is trying to solve for it right now, or maybe a lack of, and blockchain is there to either add on or to support a part of it. Whether the token's there or not, to James' point and to the points everyone's making here, it's just being really pragmatic about it. So if you're looking for things to invest in or to get involved in, you've got to really question, even if it's your own project. And if you want to know like what kind of questions to ask, feel free to come talk to us, because we've seen thousands of projects over our time and we've gotten involved in a whole lot more. So I think it's just being really pragmatic, but there's a massive opportunity. We don't know what the exact thing is, next 12 months is going to be, but I can certainly say it's trending upward because there's a lot more real world interest in what it is that we're doing very practically.
Yeah, with a lot of projects that come in through Otaris, it's the first question we ask, do you need a token? So we go through with the projects and say, do you need a token? And quite often it's no, you don't need a token. And we do have projects that build with no tokens. And to be honest with you, that can open up a whole different sort of investment from different parties as well. If there's no token, it can be quite beneficial for the project. It's really about, a lot of the projects we deal with, it would be about, do you need to incentivize the community? So building those token economics to make sure that it's not a zero-sum game where it's, token in, money out, or, we basically need to make sure that a project the token economics are a business model. They're the same, they're hand in hand, so they should be made specific to those projects. So yeah, it's a case-by-case basis.
All right, thinking about the future then, still thinking about the recent events in terms of price action, for want of a better phrase. Are we at the beginning of the next bull cycle? Is the next bull run going to follow the institutional money or the venture money coming in, or is venture money going to follow? Like, what kind of signals are you looking at the moment in terms of trying to determine what's going to happen over the next 12 months?
A lot of people don't want to go first, they want to follow. And even now at this market, you talk to VCs and they're like, who's your lead investor? They want to be able to follow, and obviously this lead has done all the due diligence and they're happy, and it saves them some time and makes the whole process a little bit easier. And that was the same thing in the bull market. It was, for lack of a better word, logo porn. You see all these VCs on this cap table and it's like, take my money. You don't even do any DD or this.
Took a lot of VCs down following that.
You mentioned the spray and pray approach, and that's what it was. Everyone vying for these same investments, and they were often small, only raising $1 million or $2 million, so tickets are pretty small. I think things are maturing and becoming more equity-based where there's bigger investments, and a lot of the big VCs have minimum ticket sizes as well, and that'll be in the 7 figures. And there's always going to be people following, and a lot of more institutional money is going to come in, that's for sure, as things mature. And I mentioned the regulatory transition thing. Once things are a little bit more clearer, more money will come in.
I think the FOMO thing was really there, and we didn't have ChatGPT to even help the VCs do a lot of the DD work, due diligence work that they needed to do. They just saw that, okay, it's market validation, Sequoia's into it, there's all these others, we'll just go in, we'll do a quick little bit of a look. Now we don't have that world. We have this world where we can actually get into the real weeds of things because we've got technology that helps us do our jobs better. VCs need to do better. At the same time, a lot of people talk about volatility, that space is so volatile. Look at the markets in crypto. If you expand it out, it's volatility in the short term, but if you look over a longer term period, we're following the traditional cycle of any other industry and technology. technology. So where do we go from here? Well, look at everything else that is out there. If you looked at 1900s versus where we are now for things like investing in the US stock markets, it's only gone up and to the right. So if you're investing in the right things, or if you're just getting involved in this space, you will be rewarded.
I think from the project perspective, we're seeing a lot of, obviously, as the market matures and the investors mature from crypto Web3, equity has come in a lot more than token, right? And so, but the transition here will be, we'll see a lot more projects that are sort of self-funded, because to get to MVP and get to profitability, they may realize, and I think that I've dealt with a lot of projects that realize that the actual cost to build the MVP to get some traction is actually not as high a barrier as they once thought. So I think a lot of founders will hold a lot more equity through this next market.
All right, we've got a couple of minutes for question, 2 minutes. So let's go we'll do 2 questions very quickly. First one, what's the biggest or say best advice you give to a newbie? So either someone looking at deploying some capital or someone looking at building something.
I would say from my end, get involved in the community. It's really hard to build on your own in this space because so many people might be doing the exact same thing. Think of community as learning what others are doing, and either you get involved or you learn something to do better in your own project. But there's so many great community meetup groups, whether it's here in Melbourne, Sydney, where I'm from, and around the country.
Yeah, I think in a similar way, it's like get exposure, get exposed in, it could be time, could be some capital, but basically as soon as you're exposed, you're obviously incentivized to learn a lot quicker, so it upskills you a lot quicker. Also, from investment and from building's perspective, it's network. It's always network. Obviously you will need to have a good idea. It can be fleshed out at some point. It could develop, as you build. But the network is the most important because that's what's going to help you in the stages when you need to raise or when you need to invest.
Yeah, I think you're exactly right. Community network. Coming to excellent events like this just to meet the right people and get good advice, listen to these kind of talks, I think helps. But you got to start somewhere. And I think being realistic about, it's not the idea, it's the execution. So the team's super important. And often when you're doing applications for accelerators, it's like, who's your tech co-founder? Because that's such an important part. You need a business mind, you need a tech mind. And with those 2 people, you can create this team around you. And if I look at a pitch deck, I'll look at the first page, I'll see what it is, I'll go to the team page, I'll see, okay, can this team execute? And then I'll look at the valuation and things like that. So I think it's surrounding yourself with the right people and getting the right advice.
All right, that is all the time we have. Thank you so much for joining us today. If you want to ask these guys more questions, I'm sure they'll be very keen to chat more with you. Just find someone in a black polo and you're halfway there. Otherwise, thanks heaps for having us. Appreciate it.
Thanks.
Thank you.